Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complicated world of corporate filings. Today we're diving into an 8K report, which in the corporate world is like getting a surprise pop quiz. But don't worry, we'll break it down so it's less like a pop quiz and more like open book test. We're looking at Aptose Biosciences, and let's just say their stock recently went on a bit of a roller coaster ride, and this filing explains why. So the big date to remember is February 18th, 2025. That's when the event that triggered this report actually happened. This is the official record of something important that Aptose needs to tell its investors. Aptose Biosciences is a company, and in case you're wondering where they're coming from, they're actually based in Canada. Now let's get to the meat of the matter, which involves some pretty significant changes to the stock itself. The key phrase here is material modification to rights of security holders. That basically means they've changed the rules of the game for people who own the stock. Back in January, the shareholders, which is the people who own pieces of the company, voted on something called a reverse stock split. Think of it like this. Imagine you have a bunch of small coins and you trade them in for fewer, bigger bills that equal the same amount of money. They were considering doing a reverse split anywhere from 1 for 10 to 1 for 30. What that means is for every 10 to 30 shares you owned, they would combine them into just one share. The goal, to boost the stock price. The board of directors decided on a final ratio, 1 for 30. So if you had 30 shares after the split, you'd only have one. Why do companies do this? Well, sometimes their stock price gets too low, which can be bad for a number of reasons. It might make it harder to attract investors, or it could even get them kicked off the stock exchange. To make it official, Aptose filed some paperwork called Articles of Amendment, which are like the official changes to the company's rulebook. They announced that the shares would start trading under the new split-adjusted price on both the Nasdaq and the Toronto Stock Exchange on February 26th, pending final approval. If you want all the legal details, the company included the official document, the Certificate of Amendment as an exhibit to the filing. To reiterate, every 30 shares you own gets combined into just one. It is like trading in 30 small Lego bricks for one big Lego brick, same amount of plastic, less pieces. Now here's a tricky part. What happens if you don't have exactly 30 shares or a multiple of 30? Well, Aptose won't issue any fractional shares. Instead, they'll round down to the nearest whole number. So if you had 31 shares, you'd end up with just one after the split. Importantly, this reverse split doesn't change the rights of the shares, just the number of them and hopefully the price per share. Think of it like cutting a pizza. Whether you slice it into 8 slices or 16, it's still the same amount of pizza. After the reverse split, there will be roughly 2.1 million shares floating around. The stock will also get a new ID number, a SUSIP number, which is kind of like a social security number for stocks, so make sure you're keeping up with the new number. The good news is that the stock symbol APTO will stay the same on the Nasdaq. It will also remain APS on the Toronto Stock Exchange. And just so everything stays balanced, they'll also adjust the prices and number of shares related to any stock options or other equity awards. In addition, Aptose needed to amend some documents as a result of the reverse stock split. That information can be found in the document, which is really just pointing back to the original information we just discussed. Finally, the report lists out all of the exhibits to the document, and the most important is, of course, the Certificate of Amendment. Now, let's step back and take a broader look at Aptose Biosciences. A reverse stock split is often seen as a sign of trouble. It means the company's stock price has fallen so low that they need to artificially inflate it to stay listed on the exchange and appear more attractive to investors. That said, it doesn't automatically mean the company is doomed. Aptose is a biotech company, and biotech companies often face a lot of uncertainty. They spend years and millions of dollars developing new drugs, and there's no guarantee that those drugs will ever make it to market. They're risky investments, plain and simple. On the positive side, if Aptose does manage to develop a successful drug, the rewards could be huge. The stock price could skyrocket and early investors could make a lot of money. The company is working on cancer drugs, and anything can happen with those treatments. However, biotech companies often need to raise a lot of money to fund their research and development. They might have to issue new shares, which can dilute existing shareholders and lower the stock price. So, what's the outlook for Aptose? That's always a tough question, especially with a biotech company. The reverse stock split is a concern, but it doesn't necessarily mean the company is a bad investment. The value of Aptose hinges on the success of its drug pipeline. If they have promising drugs in development, and if those drugs show positive results in clinical trials, then the stock price could go up. However, if their drugs fail or if they run into regulatory hurdles, then the stock price could go down. Given the inherent risks and uncertainties, I'd say a fair price range would be between $5 and $10 per share post-split. This assumes some potential for their drugs in development, but also reflects the high risk of failure. Ultimately, whether you should invest in Aptose depends on your risk tolerance and your belief in the company's management and its drug pipeline. If you're a conservative investor, you might want to steer clear, but if you're willing to take a gamble and if you believe in the company's potential, then it might be worth a look. My take is that I'm leaning slightly bearish or negative for Aptose because they were forced into making this decision. It really is more of an action that can signal bad financials. Thanks for watching. If you found this helpful, please subscribe to Corporate Decoder for more plain English breakdowns of complex financial filings.